financial accounting class, and in this class we are going to see about joint venture. Joint venture is a particular venture undertaken by two or more persons. They are known as co-venturers and they are contributing capital. That venture is for a temporary period and there is an agreement between them to share profit or loss in an agreed ratio. And now let us see what is partnership. Partnership is a continuing business with a name. It's also undertaken by a minimum of two persons. They are called as partners, and there is also an agreement between them to share profit or loss in an agreed ratio. And this activity is governed by Indian Partnership Act 1932. In this context, we must know what is consignment. Consignment is an agency agreement under which a manufacturer or a wholesaler, the manufacturer or wholesaler is termed as consignor. They are sending the goods at their own risk to their agent, and that agent is called as consignee. And the consignee may be in different place. The goods are sent only for the purpose of sale on commission basis. And now we are going to see the distinction between joint venture and partnership. Regarding name of the venture, joint venture is functioning without name, and there is a separate name for partnership. The joint venture is only for a particular venture, but the partnership is for continuing business. It's going on continuing, but joint venture may be only for few months or only for a particular venture. The persons involved in joint venture are called as co-venturers, and the persons involved in partnership are called as partners. Regarding the act, there is no separate act or particularly specific act for governing joint venture, but Indian Partnership Act 1932 is governing the partnership transactions. Regarding the basis of accounting, joint venture accounting is made on cash basis of accounting, and partnership accounting is made on the basis of accrual basis of accounting. When the accounts are closed, in case of joint venture, immediately after completion of the venture, the accounts are closed. But in case of partnership, the accounts are closed at the end of every business year. As joint venture is not at all having any name, it cannot sue on others and it cannot be sued by others. But partnership in its own name can sue and it can be sued by others. In case of joint venture, generally the co-venturers involve in the competing business. That means they are involving in the same business. One business may be as joint venture and the another may be in their own personal and individual name. But in partnership, generally they are not involved, they are not indulged in competing business activities. Depending upon the contract, depending upon the agreement, the liability of the co-venturers are determined. Here, as per Indian Partnership Act 1932, the partners are jointly and severally liable. The concept and the doctrine of implied authority is not applicable to co-venturers, but the doctrine of implied authority is applicable to partners. And now we should know what are the differences between joint venture and consignment. Joint venture is like partnership, and the relationship is just like partners. Even though they are termed as co-venturers, their relationship is like partners. In case of consignment, the relationship between the consignor and consignee is that of principal and agent. Joint venture is generally carried out in case of both movable as well as immovable types of goods. But consignment is mostly done because the goods are to be sent from one place to another place, so they are carried out only in case of movable goods. All co-venturers are having the ownership in case of joint venture, but in case of consignment, the ownership lies only in the hands of the consignor. The terms what we use for the return is, in case of joint venture, it is treated as profit or loss, but in case of consignment, what the agent gets is called commission. And the profit is shared as per the agreement ratio, and in case of no agreement, it is shared at equal ratio. In case of consignment, the commission is based on the fixed percentage. Who are going to finance for the venture? In case of joint venture, the co-venturers are financiers. They are putting capital for the venture. In case of consignment, only the consignor is investing. There is no need to prepare separate account sales in case of joint venture. But for the case of consignment, account sales is to be prepared and sent by the consignee to the consignor. The joint venture is governed only by agreement. Consignment is covered and it is governed both by agreement as well as law of agency. There are three methods of accounting a joint venture transaction. One is when they are having a separate set of books, and the other one is when the co-venturers are not having a separate set of books, and the third one is known as memorandum method. But in case of consignment, there is only one method of accounting. On which goods the joint venture is to be done or consignment is to be done, that right to choice of goods is vested with all co-venturers, but in case of consignment, the choice of goods is only in the hands of the consignor. So, we are able to distinguish joint venture from partnership and joint venture from consignment. Thank you.